Hello everyone and welcome back to another video with Business with Professor T, and today we're going to be looking at assets and liabilities and how it shapes the balance sheet. The balance sheet is worth noting, it's also known as the statement of financial position. So within this video I'll be using balance sheet, but just know that it's also called statement of financial position. And we're just going to be looking at the definition of an asset and a liability and how it works within accounting. In order for us to understand how an asset works or how the liability works within a balance sheet or within the accounting procedures, we need to understand the basic definition of the two components. So an asset is what a business owns or are permitted to use, and a liability is what the business owes to another entity. So now we know how to define the asset and liability. Now we need to know the purpose of an asset and a liability. So the purpose of an asset is to provide future economic benefit to a business, and for liability is future financial obligations that needs to be paid by the business. So now we know how to define an asset and liability, and we also know the purpose of an asset and liability. So now we need to know the type of assets and liability that we would see in a financial statement, most likely in the balance sheet, but also we can see this in other financial statements. So the type of assets that you'll see is current assets and non-current assets or fixed assets. And the type of liabilities you'll see is current liabilities and non-current liabilities. Now we know how to define, we know the purpose, and we know the type. It's time to give examples of assets and liabilities. So an example of assets are machine, land, cash, and equivalents, goodwill, equipment, trade receivables. And for liabilities is equity, loans, retained earnings, and trade payables. Now we understand what an asset and liability is and the type of examples of an asset and liability. Now we look at depreciation and we start to contextualize it a little bit more. So when looking at depreciation, there are different accounting treatments that you use for assets and liability, but the basic concept is this: fixed assets can decrease in value. However, liabilities do not decrease in value. Now we look at the calculations for the two components, assets and liability. Now there are numerous equations or calculations for assets and liability, but the most straightforward and simplest calculation is assets is equals to liabilities plus owner's equity, and for liabilities is assets minus owner's equity. If you remember earlier, I spoke about the accounting procedures and treatments for depreciation. Now we look at the accounting procedures and treatments for assets and liability when looking at credits and debits. So if we see an increase in assets, we debit the account. And if we see a decrease in assets, we credit the account. So this is more for a double entry, or we know it as a T account, but within your financial statements, you need to make sure that you specify or you make it clear, is it a debit or is it credit? So for assets, like I said previously, when you see an increase in assets, it's debited. When you see a decrease in assets, you credit. Now, liabilities, on the other hand, when you see an increase in liability, you credit. And when you see a decrease in liability, you debit. So now we move a little bit away from the balance sheet and we look at the cash flow and how the assets and liability, how it shapes the cash flow of a business. So when we see an asset, it results in an inflow of cash, which increases the business cash balance. And when we look at liability, we see an outflow of cash, which decreases the business cash balance. Last but not the least, we look at how an asset and liability is presented in the balance sheet and how you can understand the balance sheets using the two components of the assets and liability, and putting everything that we've covered in this video and putting it into practice. So when we see an asset is reported on the left side of the balance sheet on a horizontal format. On a vertical format, it's assets above liability. Now, looking at liabilities and owner's equity are reported on the right-hand side of the balance sheet on a horizontal format, and on a vertical format, it's assets above liabilities. So you have assets and then you have liabilities under. So this brings us to the end of today's video of assets and liability and how the two components comprise in a balance sheet or how it shapes a business. At this point, feel free to pause the video to recap if you missed anything or to take notes. We've come to the end of today's video on assets and liabilities. Thank you for watching and staying to the end. If you've liked this video, give it a thumbs up, and please do feel free to subscribe for more business related videos and lecture like videos as well. Thank you.